Real life military. Today we'll be talking about dividend stocks. Dividends are payments a company makes to share profits with the stockholder. They are one way that investors earn a regular amount of money, income monthly, quarterly, or semi annually. So, how are dividends paid out? The simplest way to think about it is imagine you have 30 shares of a company that pays $2 in annual dividends. You will receive $60, right? So the company has, a company earns profit. The company will sit down with its board of directors to approve a plan to share those profits in the form of a dividend. A dividend is paid per share of stock from a U.S. company and usually paid quarterly, monthly, or semi-annually. The company announces when the dividend will be paid out and the amount that will be paid out, the percentage of the stock. So if it's $100 and they pay 1%, it's $1 right there. So they will have an X dividend date. Investors need to know what that date is, because you need to buy the stock by that date. If not, then you will not get that dividend. It is the date of record. So the company pays out that dividend to the shareholder. The X date, again, is extremely important. You must get in before that. So that, in a nutshell, is how, like, the basic 101 of dividends. So if you're looking for a dividend stock, people will equate a dividend stock to a steady stock, but it's not always that way. So they are put into different categories. The first one, that would be the most solid one if you're looking for a dividend stock, would be a Dividend Aristocrat. So this is a company that is in the S&P 500 index, and it also has consistently paid out a dividend to the shareholder that has increased in size of payout for 25 years. That's a lot. So I'll say that again. I'll try to explain it again. So S&P 500. S&P 500 is the 500 best companies in the United States. So that's one check in the box. The next check in the box is they pay out a dividend that that increases every year for 25 years. So they have different factors that go into that, like the company size, the liquidity, how much money they have, and how big they're going to be and what their future prospects are. So the key takeaways from this is, again, increasing the dividend 25 straight years. S&P 500, they tend to be large established companies that will not get that super growth. So that's why they are a dividend stock. The next stock I'll be talking about are growth stocks. So just to differentiate the two, dividend stock is what we're talking about. It's not a growth stock. So it's not going to get a big boom, right? So I will go over some examples of that here in a little bit. But many of these are people go after, and they are sought after, is because they are recession proof. So they enjoy steady profits no matter what, and they have a good dividend yield. So that person will keep on getting that monthly return. So think about some companies right now in your mind that are recession proof. So we have a good understanding about that because a couple of years ago we had COVID, right? So what were some companies that keep on churning no matter if the whole world shuts down, right? So a couple of those, I have some examples. So TNT, it's an Aristocrat, so 25 years, dividends going up. ExxonMobil, Walgreens, IBM, 3M, Caterpillar. So those are a few. So think about your, like, Coca-Cola, stuff like that. So pros are they are a stable income for shareholders. So not massive growth, but they they're good companies because they're S&P 500 and that dividend keeps on coming out. It's a positive signal indicating strong financials. So they have strong financials. They've been doing it for a long time, and they are solid companies. You're not going to get. It's not going to go up by $100. It's not going to have that jump, and it's not going to be very flashy. It's not flashy. Like dividend stocks are not flashy. So cons are dividend may be paid in lieu of growth opportunities, like I said before. So instead of the company going up in price crazy, it's not. The reason why um, people go after dividend stocks is because they're going to get money back. So they the way they invest into their company and get people to invest into them, so is giving it a dividend. So they are not going to have a huge growth because they're giving it back, right? So, and the stock may produce lesser capital gains, and dividend payments are a taxable event. So once you get that dividend payment, you will get taxed on it. So Dividend Aristocrat, 25 years. What's better than a Dividend Aristocrat? A Dividend King. Dividend Kings are known for paying out dividends consistently over time for more than 25 years, for at least 50 years. So the only company I could find was Tootsie Roll. They've increased their annual cash dividend for 54 consecutive years. So that's crazy. So dividend stocks are a good stock to start off with if you're afraid of getting into the stock market. And they have good they're good companies. So on those lists you'll find like your Walmart, your like just super solid stocks. So I'm going to start going over these stock videos because I really enjoy stocks. The next one I'll hit on is growth stocks, the opposite. So one thing I want to keep in mind is like dividend stocks don't start off as dividend stocks. Every stock starts off small and becomes bigger. So the companies now that are growth stocks one day will become dividend stocks. So the best example I have of this is Apple. Apple once was a penny stock, and then they were a growth stock, and then they became a dividend stock 40 years after they came. No, 1980, 2000, 30 years. So it took Apple 30 years, and they became a dividend stock. So they weren't always a dividend stock. None of these stocks were ever, they didn't start off as dividend stocks. Well, some of them did, but the companies that actually became companies that started off as Walmart or your McDonald's and all that stuff, they weren't always dividend stocks. All right. So that's all I got today about dividend stocks. Hopefully that's a good breakdown and shows you how when you buy, how that dividend comes back to you. Look for the X date and then when you're going to get paid out, monthly, quarterly, or whatever. If you have any questions, please comment on the video or just hit me up directly. Later.